Today, October 13, we detected 13,180 unusual options on XP stock. And so in this video, we will analyze what this means for XP, whether it will be going up or down based on the data. Now, before we get into this, we want to point out that back in May, we covered XP because there was also some unusual options activity that we detected. May is on this day. It was May 5th that we made a video on XP on this day. And we predicted the stock would go up based on the data. And as you can see, it did go up. We will put a link at the top here if you have info cards turned on, if you want to watch that XP video. We did also detect the options again on May 19, which is this day, and when we had 100% profit by then, and also more unusual options as well. So we'll put a link also again at the top here if you want to watch that. That was on May 19. Yep, so that was May 19. And so we did 2 videos in the past on XP already, and both of them were bullish, going long. And so as you can see, it did go up all the way to $27 this year, has now pulled back, and now we are at about $21.41. So what will happen to this stock? Well, let's take a deeper look at the data. So these unusual options you can see is for December 15, 23 strike calls and 25 strike calls. Okay, so when we take a look at the chain, we can see that here the options are right here, 23 strike calls. We are also in the position, and you can see that we are buying the 23 and selling the 25. That's what we believe these unusual options are doing. Okay, so when we take a look at the value of this trade, so each trade, you can see when we analyze it, this is going long, about $55 each. And so since we know that the number of contracts was about 13,180, total value of the trade, $724,000, which is actually quite unusual because the May 5th unusual options activity was also about $700,000. So make sure to watch that at the end of this video. We'll also put a link at the end. So it could possibly be the same trader doing this. So something to keep in mind. And so you can see that the risk of $55 is the max loss per trade, has potential to gain $145 with this vertical call spread strategy. So 145 divided by 55 times 100 means this trade strategy has the potential to make 263%. Okay, so this is a good risk to reward ratio here. Okay, and let's take a look at the charts here. We can also see that we are at a support level here. So during this time period, this was around July and late June, it was consolidating in this trading range before it broke out. and this range had a support level at this $21 where it's currently at. Okay, so technically this is what it looks like. And so these options will expire in December, so we do have earnings coming up, so want to keep that in mind. The earnings is, let's see, November 13, so it is before the expiration of these options, so that could be a potential risk. Or these options could actually also be an earnings trade, because that is about a month away, right? Exactly a month, 30 days, right? If this was helpful or you learned something, please smash that like button, subscribe if you haven't, click the bell icon, and if you're interested in other trades, make sure to join our membership where we share exclusive videos to our members with the data that is valued over $1 million, because this trade was only 700,000. It was less than $1 million. And so the trades that are valued over $1 million done by wealthy investors are a lot more accurate. All right. Make sure, again, watch this May 5th video. We'll put a link here. And we'll put that May 19 video over here. And you can see the profit that we made from this May 5th trade when we got into it. To see how we trade and what our strategy is all about,